Great. Good morning from Vancouver. Great to be back on this forum. Always appreciate the opportunity to present here. This company, Carbon Done Right, was recently renamed from Climate X, still KLX, listed on TSXV, and soon to be dual listed on the AIM exchange in the UK. So I'm going to walk you through what we've done, how we've enhanced the company, with a technology offering, and then give you a quick update on our portfolio of projects and progress over the last few months. So myself, Kev and Neil are the three co-founders of the company. We currently own 31% of the company. We've been involved since the very beginning. My background's environmental sciences in the UK originally, and I've been working in carbon markets since about 2005. Neil Passmore is executive chairman, half-time of the company, and background in investment banking and also in the UK military. And then Kev Godlington, who really anchors all of our activities in West Africa, has been involved in West Africa in agricultural commodities. He established the largest sustainable palm oil production facility in the world, producing organic palm oil for European buyers. Previously an army officer and foreign Commonwealth officer, and very actively involved in stabilizing West Africa. So the big vision for the company, we've always been committed to restoration and conservation of large-scale nature-based solutions, so tropical forest and mangrove ecosystems. But our plan now has been upgraded from hundreds of thousands of tons to a target of 1 million hectares of land restoration, planting millions of trees. Secondly, we focus on aggregating ownership of land from smallholder farmers with a technology system, and I'll tell you a little bit more about the blockchain traceability system that we've developed that effectively tokenizes carbon credits and creates a token that, unlike most of what you see in the crypto world, is actually attached to a real underlying asset. And that's what makes this very exciting in terms of traceability, but also in terms of investment. And then within that, we've also built a tech-enabled platform that tracks every single ton of carbon that's produced back down to the original tree. We built with the University of Copenhagen an AI machine learning system that monitors each tree on a daily basis. And I'll share a little bit more detail with you about that over the next few minutes. The problems that we're trying to solve, firstly, obviously the challenge of climate change. Last year was the hottest year on record. The oceans are now hotter than they've been in millennia. And scientists can't explain the current pace of temperature rises on a global scale. The models just can't account for this speed of growth. So the urgency around taking action on climate change has never been higher. We've seen concerns about transparency in carbon markets, which is what our technology solution addresses. And then ultimately, for most of the land in Africa and Southeast Asia, which could be used for carbon credits, it's owned by smallholders and small units. We're an aggregator of those blocks of land, of those leases. These are the solutions that we've presented. We focus on planting native tropical and mangrove species and on conserving forest areas. We built an enhanced traceability and accountability platform that's unique, proprietary, and transformative within the market. And we build all of our projects, just as the resource sector has had to upgrade its consents and its license to operate mechanisms. We build all of our projects on the basis of free, prior, and informed consent with, I would argue, unprecedented levels of transparency. So not only can you see where every carbon credit comes from, but you can also see the exact leasehold that it comes from. And all of the projects are fully and independently monitored by a third party. In terms of the carbon markets, many of you will already be familiar with this, but what drives carbon markets is, if you see on the right-hand side, large industrial polluters that emit carbon into the atmosphere and make net zero commitments. When they make a net zero commitment, they can reduce their emissions within the facility. Once those reductions start to become more expensive, the only other way they can get to net zero is by purchasing carbon credits. We focus on nature-based solutions because nature, millions of years ago, designed the most cost-effective system for pulling carbon out of the atmosphere, which is photosynthesis. And that locks up carbon long-term in soils and in biomass. So we enhance nature's ability to pull carbon out of the atmosphere. We have those tons fully validated and verified by a third party, and then we sell them to large final emitters. And just to put this into context, the global demand for carbon is driven by at least 4,000 companies that have made net zero commitments, and those companies represent 1/3 of global market capitalization. So the demand in the last 5 years has grown astronomically in terms of the volume of credits that are now required into this market. In terms of the growth of this market, it's sat around a $2 billion market for the last couple of years. It's growing very, very significantly. We have a number of different sources here that talk about a market that's ranging from $18 billion to $40 billion by 2030. So somewhere between a 7 and 30x growth in the size of that market, just based on all of the demand that's sitting there against net zero commitment. So very, very strong growth conditions for our company at the moment. And then in terms of pricing, historically, carbon has traded in voluntary markets at an average of, let's say, $8 a ton. What we're seeing again in response to this massive increase in demand is carbon prices growing to $25 to $40 a ton by 2030. And I'll share with you one of our pre-purchase agreements as well, which set a floor price on a pre-purchase basis of $30 a ton, sorry, $15 a ton. But what's also interesting in the top graph is other types of projects like energy efficiency and methane projects and renewable energy. These projects have all stayed at around $8 a ton. Restoration projects, which involves restoring tropical ecosystems typically, have grown very significantly in 2023 because there's been a flight to quality for projects. And this type of project, for a range of technical reasons, has much lower levels of uncertainty, and investors and buyers have much higher confidence in this project type. And this is completely central to the company's strategy in terms of the growth of projects. We're also seeing changes in regulation, EU regulating now what kinds of stamps can be put on carbon projects, demand for much higher levels of transparency. So we've created our own kite mark and quality assurance mark that will go onto consumer brands. And the assurance that the companies get from this is each ton of carbon associated, let's say, with offsetting a sustainable brewery, for instance, can be traced all the way back to the trees that exact trees that those tons came from. So this expansion and regulation is creating a market opportunity for developers that have the highest quality projects. Some of the sort of broader trends in the market, emergence of risk rating agencies for carbon credits. Regulators, I think, are one of the biggest drivers in the sense in which financial regulators in public markets are saying to companies, if you've made net zero commitments, you have to demonstrate how you're going to achieve that. If investors are making investments on the basis of those claims. So that's putting a lot of pressure in the EU and in the US and in Canada to show that they're doing what they say they're doing. And then in terms of changes in technology, we've got tokenization and blockchain systems that we're taking advantage of, but also real enhancements in the availability of daily satellite coverage from companies like Planet and Earth Daily. And that gives us the ability to monitor our planting areas almost on a daily basis, and that's transforming the way that this market is working. And we've tapped into this trend and built and these technologies and built what I would argue is the most transparent and highly dense monitoring system that's ever been developed for carbon markets. So there's sort of 4 core elements to what we do as a company. The old company, Climate X, was just focused on activities as a developer, conserving and planting very large-scale forest and mangrove areas in places like Yucatan, Sierra Leone, Suriname, and Ghana. Our technology, Tree Counter, is a proprietary technology that uses AI systems and machine learning to monitor the trees. We still work with Vera as the global standards body, but we lay our own certification on top of that. And as part of the listing in London, we've acquired a company called London Carbon Exchange, which is a fully developed marketplace for tokenizing carbon credit investments with what I believe is the right way to use blockchain technology, which is a smart contract that attaches future obligations to a real asset. So each leasehold area gets tokenized, and investors can participate in that market and get exposure to very significant growth in those credits. We ultimately the focus on smallholders is just recognizes that huge proportion of the land that's available, particularly in Africa, is held by smallholders. Something like 90% of the farmland in developing nations is in less than 5 hectares. Between 5 and 10 hectares is typical. And this is the way that you get access to a huge land base. We've secured already close to 100,000 hectares of land across West Africa through this aggregation mechanism. And then the social benefits of this from an ESG perspective is that land that's highly degraded, that has no value to smallholders, is generating income even before we're planting trees for them as we sign the leases. And that can be transformative in some of the poorest communities in the world. So the social benefits of this, from our perspective, are at least as important as the carbon benefits. In terms of our current project pipeline, we have in the first 2 projects 57,000 hectares of land that we're restoring with native species. We've planted almost 2,000 hectares in the last 2 years. We have a mangrove restoration project covering 5,000 hectares, which we planted 20 hectares on last season and probably 300 hectares this coming season. We have a mangrove conservation project covering 3,000 hectares that should generate credits in early 2025. So in Sierra Leone, we have a very strong relationship with the government. We're working in one of the poorest countries in the world where there's very strong government support and community support for the idea that the demand for carbon credits can be transformative to these rural economies. In Yucatan and Suriname, we have a slightly different model where we've negotiated concessions with the state or with the national government. That gives us the right to access land and the right to the carbon credits that are generated from it. So in Yucatan, we have 10,000 hectares under development right now, but up to 40,000 hectares within the core area. In Suriname, we have up to 30,000 hectares of land that's been degraded because of diking and changes to the hydrology. And then we've just recently picked up a project in Ghana covering up to 10,000 hectares of land from a development finance institution that wasn't able to establish themselves as an operator. So we've taken over that land and we'll be planting there later this year. In terms of the revenue profile from these projects, the forest restoration project on the left shows 25,000 hectares planted out by late 2029. By 2031, that'll generate 600,000 tons of carbon credits. So you can see this geometric growth in credit production from planting. Similar kind of profile on the right-hand side from the 5,000 hectares of mangrove restoration. And then what's unique about our approach in terms of how we finance this is we've worked with BP Carbon Trading as our first customer. They've paid $2.5 million, committed $2.5 million US to the first 5,000 hectares of planting. That pre-purchase investment funds all of the remainder of the pre-planting costs for that project area. So we effectively using the client's money on a pre-purchase basis, which we receive as revenue. We receive those funds and then we use the customer's money to complete the planting, and then we repay them in tons as the project ramps up production. And the effective price of that pre-purchase agreement is $15 a ton. So that's in advance of trees actually going to the ground, and that's a model we're scaling and replicating. In terms of the technology platform, we built a groundbreaking machine learning system called Tree Counter. It's proprietary to Carbon Done Right, and it builds on a NASA database that can identify up to 300,000 different tree types using satellite data, so using space-based satellite systems. What you can see on the next slide, on the right-hand side in the middle panel, with the green dots. If I was in the room with you, I'd pull out my smartphone and show you the app, and you can click on each individual tree, which is represented by those green dots, and you can see how much carbon is sequestered, how much biomass is sequestered, the entire profile of the project area. So in a way, we're kind of gamifying the way that carbon credits are produced with our tree counter technology. We work with and fully incorporated a technology called BEX 360. This is a technology where you scan the project with a smartphone, and then you have the exact GPS coordinates of every tree and every species that's planted. And that creates this full chain of custody, this full traceability system for the platform. And then we also monitor, obviously, with ground-based measurements and a range of different satellite sources, including Planet and Sentinel and Landsat imagery. In terms of the financial and corporate background, we were listed on TSXV 2.5 years ago. We raised initial capital of around $11 million. We've also secured $2.5 million US from BP on top of that. About 80% of that money has gone into actual planting and operations on the ground. We run a very lean topco. As the founders of the company, we limit our salaries and focus really on the equity growth of the business. Our current plan in the context of a London dual listing is raising further capital to expand that investment over the next 18 months to 2 years. We have a pretty clean, simple share structure, 94 million shares issued, 3.5 million options. Management team, just the three of us represents about 31% of the company. We have a 12-month VWAP of 12 cents. I noted the previous speaker spoke about the challenges of dealing with shorting in the Canadian junior markets, and we've certainly suffered from that over the last few months. But we're very optimistic about the impact that the AIM dual listing will have on the company. We've spoken to over 30 institutional investors in the UK. In the UK, there's a strong market and demand for ESG-focused stocks. And so we'll have both the voluntary carbon market stamp, which is only the second company in the UK to have that, and the London Stock Exchange green stamp as well on AIM, which makes us eligible for investment by ESG-focused funds and investors. So we're very optimistic that this transition to a dual listing on AIM will significantly increase the shareholder base. We have a very strong board. Myself, Kev, and Neil sit on the board. Abiyomi Akinjide is the managing partner at Fasken Martineau in the UK, very experienced West African energy law practitioner, globally recognized for his expertise in these markets. And then Celia Francis, who's technology developer from the US, based in London, who's also been very active in establishing a lot of the infrastructure for carbon markets. And then Dan is joining as CTO on dual listing, which we believe is going to happen around the 27th of April. So we have an incredibly strong leadership team behind this company. We've announced both a Canadian private placement, under a life exemption. We've also been very active over the last month in London, completing a roadshow, and expect to secure somewhere around $6 million US into the company. Use of funds is very much focused, as we have in the past, on getting project into the project sites, to completing the technology platform in the next quarter, and being ready to operate on the markets over a very short period of time. And then just to finish, our first agreement with BP Carbon Trading is this pre-purchase model, which, as I said before, uses the client's money through an offtake agreement, a pre-purchase agreement, to fund the development of the project sites. In terms of our prospective partners, we've got 14 different groups under NDA, and companies including Mercuria, Shell, Apple, Equinor, Hartree, and Macquarie, all very actively reviewing our pipeline of projects. And then we've also started working with luxury and consumer-facing brands, based on the history Kev has, particularly with working with sustainable palm oil. We're working with companies like Ritter Sport to help produce credits that they can use to make their own products carbon neutral. So very excited about what this means to build out a consumer-facing portal really for these credits, with the enhanced traceability that means every product that gets sold can be traced back to the exact trees that generate the credits in the first place. So I promised to do this in 20 minutes. I'll pause here and open up for questions.
All right. Well, thank you very much for the presentation, James. So everyone in the attendees, please, if you do have questions, this is the time to do it. James, I want to go back to two things here. So many attendees might be their first time hearing about carbon credit. They hear maybe in the news there's a carbon credit market. There used to be one in Europe in 2008, and then it crashed, and then everything changed, and so on. Can you walk us a little more into details about what is this market, who's operating it, and how does it work?
Yeah, certainly. So, I mean, the EU still has the EU emissions trading system. That's a very large scale market. It doesn't allow for nature-based solutions. It focuses on technology and industrial emissions. Globally, the core organization that's developed and supported carbon markets is called Verra. So it acts as an international standards body for all carbon credits, and it also acts as a registry. So any operator that's producing carbon credits will register on Verra, follow the accounting protocols that they've established for different project types, and then they will the registry serializes every ton that's produced. So a buyer can come to the registry, purchase the tons, register them in their name, and then retire them in their name. So there's no double counting risk. And you have global transparency about every project that's produced. And Verra represents probably 70% of all projects produced globally. It's the principal exchange. And then they also monitor the third-party validators and verifiers. So they certify those. And then the validators of the project provide reasonable assurance on the project production. And that industry is very well established. Globally, there's a large number of validators that operate in different countries. The rules for doing these projects have been around for 20 years. They get updated regularly. So they're a bit like sort of IFRS standards, except for carbon, and with that reasonable assurance and audit stamp attached to it as well.
Okay, that's quite clear. And then how does your exchange comes to complement this one or compete with it? Can you tell us a little more also about that?
Yeah, we don't compete with it. Ultimately, the projects still get registered on Verra as they're produced, but this creates a forward instrument, basically. So the tokenization of the real assets, the underlying land leases, gives a much broader base of investors an opportunity to participate in carbon markets, and the exchange function, once that's tokenized, allows them to trade those future rights. And so we have an opportunity for individual investors to get direct exposure in the same way that BP is getting direct exposure as a wholesale buyer to those projects and credits. So we're not replacing Verra. We still recognize there's a need for a third-party registry for these projects, but the tokens and the future rights represent an investment into the underlying real asset, into the land leases, and then we're able to, as the credits are produced, the rights associated with those credits are also attached to the token. So, the closest analogy is to NFTs, actually, because there's a sort of an image and a physical asset that you can identify in a map that you can own exclusively. But the difference is there's a real asset that sits underneath it. It's not just a photograph of someone's dog. It's a real asset. And then there's rights attached to that asset, so the investor gets exposure to that upside in carbon markets, and their trading around that is a sort of futures instrument, effectively. And we think it's the right way to use blockchain technology. I've been very skeptical of it in the past and crypto in the past, but this gives us a way of tokenizing something attached to a real underlying asset.
Exactly. I think that no doubt this is a very, very, very good and prominent use case for crypto beyond being asset or other things what people believe. But I absolutely agree with you on that. Continuing on that, so then when is this platform going to be active and people will be able to register and then begin trading the credits?
Yeah, so we're the first phase of the technology development is integrating all of the technologies. We have a team that's already been working on the machine learning and AI tools. We've invested as the founders, we've invested almost $300,000 in advance personally into the development of that platform. And so we expect within the next quarter to have a full working minimum viable product for the platform, which we can test. London Carbon Exchange itself is already fully developed and fully functional. So this is really just a case of connecting the underlying BEX 360 system and the tree counter platform to that. So we have a very, very high quality team working on it, and we believe we can get that completed in Q2, early Q3 of 2024.
Okay, great. And then when you're talking about the additional investment of about 6 million that are going to be coming up into the next 18 months or so, are we discussing dilution here, or are we discussing investment directly in projects? How does that will work?
Yeah, the 6 million target is the 5 million is the minimum that we need to complete the AIM dual listing. So we need an 18-month runway under AIM rules. So that will be dilutive, and in addition, we're very actively seeking further pre-purchase contracts with those 14 different groups that are in the data room currently. So we anticipate that we'll have a significant increase. BP Carbon Trading has a right of first offer to expand from 25,000 to 25,000 hectares. So that'll be another $7 to $8 million US into the project as well, in addition to any other funds we can secure on a pre-purchase basis. So I would expect over the coming year, somewhere in 10 to 15 million US in further pre-purchase agreements locked in 2024.
Great. And we have about a minute left, and there's something I really want to touch with you. 31% ownership,
Yeah.
basically three guys. How does that change the decision-making process when you do have such an equity position in a publicly traded company?
Yeah, I mean, from an investor's perspective, that means we have a very significant stake in the future of the company. We're all committed to it. We're all locked in. We'll be locked in under exchange rules for at least 24 months, further 24 months. But you've got people who are founders. We're not guns for hire who've been brought in as to run a company. We're very much founders of the business. We're investing in this round, and it really locks us in personally. And then we've all got boots on the ground in these countries, built relationships there, very, very strong commitments to the success of this project. So we all expect to be around for the next 10 years, and I think that's a very strong indicator of the strength of the business to investors.
Absolutely. That's it. Time is up.
Thank
It's
you.
2 o'clock here, 8 o'clock in Montreal. Thank you very much for your time, James. I hope
so
our
much.
attendees got a good time knowing more about this new commodity. I call it a new commodity, basically.
That's a great way of describing it.
And best of luck, guys, and hopefully see you next time at the next event. We really love following your story.
Thank you so much.